Hello, everyone. Thank you for being at our live podcast. It's always interesting. Last year, we did our first live podcast here, and we interviewed 6 individuals from the banking industry. They brought new insights. We had great dialogue, very informal. Everybody, before they show up for these things, wants to know what's the script so I can get ready. We basically don't share scripts. We kind of shared ideas, because the last thing we want them to do is over-prepare, because scripted answers aren't what you're here for. I thank you for being here. I also want to thank Nahas for sponsoring the podcast series. They're very generous in making it so we can do this. So I thank you. I hope we bring it all for you today. And I want to introduce our next guest, the president and CEO of the Consumers Banking Association, Lindsay Johnson. Where do we start?
Where do we start?
I don't know if I can bring anything new to the table, because you're in the press all the time. And not bad. And I'm not too sure if you always think it's always good, because you have a lot of moving parts. For those who may not be aware, give us a little bit about your background and what got you to where you are today at the CBA.
Sure. So thank you. Thank you for having me. Thanks for the conversation. We had a conversation earlier, and it's always fun just to kind of nerd out on some of these issues with you. Always appreciate the chance to do it. So I've always kind of been at the nexus of financial services and policy, and so have been at a Federal Home Bank, and I'm sure every one of you know what a Federal Home Bank is. There were 12 at the time. There are now fewer. I was at the Atlanta Bank. And then had the chance to go to Capitol Hill and work on Senate banking and Senate banking issues. Went to PwC, and then kind of took a little bit of a leap of faith and started a trade association in mortgage finance, and spent some time there. And before coming to my favorite job, which is Consumer Bankers Association. And I am sure that we have a number of members here in the room. I'll just give you a little bit of a 1-minute spiel on CBA. So CBA is the only trade association exclusively focused on consumer retail lending. And if it touches a consumer, whether it's credit card or home equity or auto or card or risk, CBA aims to be the lead voice. Our members, for the most part, are over 10 billion in assets. And so those two things, being over 10 billion in assets and being focused on consumer retail issues, kind of make us the lead voice on CFPB issues.
So, with that as a background, you joined CBA how many years ago now?
2.5.
Okay, so it's been a while. Post-COVID, pre-financial, the middle of the financial crisis. But we have a completely different environment right now. It's, if anything else, it's transitory. Mm-hmm. You don't know exactly what's going to come up the next day. It's not just a political issue. It's just overall the industry itself is moving so fast. What is the biggest challenge you face today at the CBA?
Well, so first of all, I mean, you're right. The noise is sort of at this level that we haven't seen, and boring banking is gone, right? We haven't seen it since the financial crisis. I think the biggest challenges that I see are we have so much attention from regulators, so much undue attention. You know, if you can write a rule, if you can write a regulation that is common sense, it makes that, is addressing a market failure, is addressing a consumer harm, absolutely it needs to be written. But what we've seen over and over again is just a lot of redundancy, a lot of rulemaking that doesn't truly actually have the outcome in mind before it's written. Or in the last several years, we've seen politics drive rulemaking. And we can get into that, but I think you've seen probably over the last 4 years, the industry find its voice like we haven't in quite some time. And so we can get into that too.
Well, it's interesting because with every new change comes both sides of the story. Mm-hmm. You know, we talked about earlier that something that looks relatively simple on the outset, or good news, limiting let's say, interest rates on credit cards or limiting NSF fees may look good to the lay consumer, but there's all kinds of elements that underlie that it's your job to help your members communicate that to the public in a nuanced way, because there's all kinds of policy decisions in that and regulatory and compliance issues. How do you deal with that? I mean, when something comes up, such either one of those, how do you work with your members, but how do you also become a voice of the industry so that you can get the message out that basically impacts every one of the people in the room, no matter if they're above 10 billion or not?
Yeah, so I think the first and foremost thing is, we're for consumer protection. I mean, this industry adheres to the highest standard of regulation, of consumer protection, of data privacy, of every standard essentially out there, fair lending laws. We are for consumer protection. What's troubling, though, is that, especially over the last 4 years, where we did see political campaign polling actually driving some of the rulemaking around junk fees in particular. So credit card late fees is a great example, where you've got this rule that comes out following this announcement of junk fees. And even the CFPB at the time admitted that 74% of consumers who paid their cards on time would see their costs go up. So we peeled that back a little bit and we said, look, that's 50% of subprime borrowers who pay their bills on time are going to see their costs go up. So much of it, and it's not a bumper sticker, it's not junk fees, the bumper sticker, but it's peeling it back and saying, we're going to focus on the consumer. And if this truly is better for the consumer, then banks will adapt. If this truly is about consumer protection, banks will figure it out. But if we find that our consumers are going to be worse off, they're going to have less access to credit, then that's going to be something that we're going to work to address. In the case of credit card late fees, we went through the normal channels. You submit a comment letter. Again, if many of you are part of our membership, you know this process, and there's other trade associations that you may have worked with as well. But you submit a comment letter, and I joke, but it's actually true. Submitting a comment letter over the last 4 years was like going to marriage counseling when your partner started picked out another spouse. Like, it really wasn't doing a whole lot. They landed exactly where they had started, right?
Yeah.
So you kind of take it and you say, okay, our avenues for having our voice heard are no longer there. So we actually did join a lawsuit against the CFPB on that rule. It's tied up in litigation right now. We actually see it being pulled back. And there were a number of other lawsuits. That's not something that the industry has historically done. That was the first time that CBA has sued our prudential regulators ever. And so it's not a comfortable place. We don't anticipate it going forward, but it was necessary.
But it's interesting because there's so much social media around everything going on. Everything's being politicized, even if it's a somewhat non-political issue. There's dynamics of the different organizations that you have to work with that have a vested interest in certain things that you also have to represent the banking industry and the consumer. As an industry overall, the financial institutions have always provided the leeway to say we have the customer's interest in mind. But now there's more scrutiny on what does that really mean? And do they really have the customer's interest in mind, or is it bottom line? I mean, I will argue the fact that today, with data and insight and the way people are using even AI, there's more AI being used to streamline back office and save money than it is to make the consumer's experience better. That may be a little bit, I'm glad I'm saying it, not you. But the bottom line is, I don't see nearly as much momentum in the customer experience. While there's a lot of talk, how do you work with your financial institutions to say, we've got to get better on this in an area such as data and insight, which by itself is a lightning rod for how much data is too much data, how much insight is too much insight?
Well, so a couple of things. I'm going to peel back. It's a multifaceted question, so I'm going to peel it back a little bit. So overdraft is a great example where you did see the industry, because of technology, because of a number of innovations led by the industry, without the government, without regulators ever taking any steps whatsoever, the industry cut overdraft revenue in half. And that was really led by large banks because they could utilize that technology. Many banks did it different ways. Some offered same-day, grace periods, 24-hour grace periods, de minimis amounts. They looked at their customers. How did they use overdraft? And they innovated. And so they made that product more consumer-friendly. So that, again, all happened without regulatory intervention. I think when we think about consumer data and insights, again, it has to be in the best interest of the consumer. So to your point about the bottom line, it will hopefully benefit banks' bottom line. But the stickiness of that consumer, the experiences that consumer receives because they have those real-time insights and they're getting much more out of their experience with their bank, that is the holy grail. And so when we're talking about credit cards, for example, that's a great place where you see credit underwriting and AI and other technologies. That is a very good place for that technology. You can underwrite more consumers. You can do it more efficiently. You can do it more effectively, and hopefully bring more consumers into the banking system. Credit cards are the number one way that people have access to banking. So it is about financial inclusion. Once they're in now, and this is really where I think we have so much work to do, and just a lot of really good promise out there. Once they're in, how do we improve their financial lives? How do we give them financial tools? And banks are doing this every single day. How do we help them understand how to manage their finances? How do we, preemptively say, hey, it looks like you are going to have a small dollar loan need, or you're going to have another, product need. How do we anticipate that and help drive that? Those are the conversations we're having right now. And part of it on the AI front is how do we make sure that regulators, appropriately use the tools that are in place. So model risk management that exists today is a fantastic tool. Banks adhere to it. It is effective for AI. It's effective for generative AI. Non-banks don't. So if we want to have a conversation about regulation of AI, let's start there.
So you just mentioned the non-banks don't.
Yeah.
How do you level the playing field, or how do you work towards leveling the playing field, which may not be regulating down the fintechs, but opening the doors for traditional financial institutions? Because you have this whole paradox of risk reward, of being able to say, okay, we say we want to do better for the consumer, but that's going to mean that financial institutions happen to open up their risk mindsets a little bit and not clamp down to the point that they're only looking at A loans. So how do you work at building the playing field, not because you look back, again, 4, 8, you pick 12, we'll just take 4. Why would we take 4-year increments? But on the whole issue of we got to stop the fintechs from doing X, to now really more likely saying we have to open the doors to allow the banks to do Y. How are you doing that right now?
So I think there's a couple of different things that we are communicating. One, our job is to make the regulatory and the operating environment better for our banks to be able to go out and do what they do. On the regulatory front, and really just on the competition front, I think banks are welcoming the competition from a lot of fintech players. It is pushing us to be better.
Yeah.
It is helping us see opportunity. They're nimble. They can execute these things. I also think that fintechs, especially over the last 3 years, have realized the benefits of having a bank partner that is not the tiny institution, the bank partner that has the wherewithal, because third-party risk management has come under scrutiny. I don't think that piece is going to let up. What I think that banks will continue to have problems with, and we should, is if you want to compete, compete. But if you're going to compete just solely on a regulatory arbitrage play, that's going to be a problem. And I think that we're going to have, and we are having, more success explaining why that shouldn't be allowed. So one great example, and I hate to pick on them, but Chime is a great example, right? Where you've got Chime making close to $2 billion of revenue on debit interchange, where banks have been completely kneecapped, and the federal government, the Federal Reserve, came in and set prices for banks on debit interchange. Why? If it's good for the goose, it should be good for the gander. The same thing for consumer protection. Consumers should not have to guess if they've got the same consumer protections depending on who and where they're getting their financial services from. So our approach is like activity, like regulation. And if you want to bring down regulation on banks, we're probably all for it. But like I said, there are a lot of good consumer protections that have been, the banks adhere to, that it should just be extended to non-banks. It shouldn't even be a question. So that's one of the things I think we're really thinking about. I do think we're going to see an evolution, though. You've got folks like Mickey Bowman in, and this is the unfortunate thing. You talked about 4-year increments.
Yeah.
So Trump 1.0, you had, regulators with innovation sandboxes, you had fintech partnerships that were encouraged. Biden's administration came in and really started to crack down on that, maybe because there was such an explosion over the last 4 years. And
there are a
so
lot of
some
things
that
going on in the
right-sizing.
outside world too that made it so
lots
that
of things.
people were losing their houses. All things were
Yes.
happening because of COVID, and people were very scared more than anything else. Yeah.
Yes. So you had this explosion of lenders out to the regulatory purview. And I think that regulators are also waking up to the message that we've been saying, right? We kept saying, if you regulate so heavy-handed in the banking space, that lending will move. It will migrate. So you saw mortgage, especially through the pandemic. You saw mortgage transition to non-banks. They actually had the vast majority. It's kind of evened out now, but they had the vast majority of lending in that space. Personal lending, auto is moving. You just see, business line after business line because of regulation. That shouldn't exist. I do think that we're going to see a more open regulatory regime to seeing if we can have common sense regulations and try to apply those across the board.
So you just had your annual event, big event, CBA Live, I believe.
Yep.
What was the biggest concern that you heard at your event?
It was kind of an interesting time, as you can imagine. We're like 100 days with this new administration, and there's just a ton of focus on what are we going to see with this new administration. And I wish that I could tell our members, like, look, you've got day jobs. You can stop worrying about what's happening in DC. But obviously that is not true, right? We've all seen just whiplash over the last 12 years or so. So I think one of the biggest things is just what can we expect? The thing that we are focused in on is trying to leverage and identify those opportunities through the chaos. And I think on the regulatory side, that's where we anticipate we're going to see some relief. We think that there's going to be an intense focus on pulling back regulation. But we went from over-regulation and that conversation to a conversation about whether we were going to have certain regulators at all, including the CFPB. Yeah. So that's some intense change that everybody's trying to work through.
The uncertainty about, you kind of referenced it, that the thing that people were afraid of was not knowing what they should be afraid of, which again gets into the whole use of data and AI to build resilience within your organization. I think one major problem with, I'll say, number 11 bank down as far as size is not using the data analytics, digital transformation mentality to say, how do we prepare ourselves for what we don't know about?
Yes.
We kind of seen the worst of many worlds. In the last 5 years, we've seen COVID. We thought that was the end of the world. I don't mean that literally, but bottom line is organizations got a government regulation on a Thursday, had to implement it on a Monday, and they did it with nobody at work. Right. They did it digitally and didn't even know how to make decisions. And yet, if you were to sit there and say, okay, could we think we could change X, Y, or Z in a 5-day period? Every bank would say, there's no way. We found a way to do it. So that shoots out the window. We then got into financial uncertainty and complete change of interest rate environment and fintechs going out of business, things of this nature, which created, anxiety. But I think we have to look at an industry that really has to use data and AI, not just to satisfy the customer, not just to drop costs, but to make it so that you're more prepared for shifts that will happen instantaneously, in many cases without any warning. I mean, you had your event and nobody knew what was going to happen the next day. I'm sure some people were staying up all night going, okay, when's it going to hit us?
Right. How
do you prepare, Lindsay Johnson prepare, and your organization prepare by helping your organizations prepare?
So it's a great conversation that we had actually at our event and with our board, and we talk about with our members. We've got 15 committees. Again, these are typically the heads of the different product lines at the banks, and we anticipate. And so some of the largest institutions, as you all know, they've got stress tests, and but if you talk to a lot of the biggest banks, they'll say, look, we're doing that plus. We are working to anticipate every scenario. We are working to really understand what is our downside risk. We're also working to understand where are opportunities. And I think that the technology that you're talking about with AI and generative AI can help every institution really identify where are the risks and where are the opportunities. And so for us, we were preparing for the opportunities as much as the risk. For over a year, our team was really planning for the outcome of the election, either side. January comes, the president's not in office yet, he comes in end of January. We release a white paper and we say, here's everything that should be done. And from our vantage point, related to CFPB, because there's overreach, there were advisory opinions, they should have written a rule. And you saw the administration be very open to that. So find the opportunities and then understand the downside risk. If you didn't know that the president was going to focus on tariffs coming into this election, then you were under a rock, because he has been very clear that that was his intention. I can't say whether it's going to be good or bad. I don't know how far it's going to go, but clearly this is something that we all knew was coming. So we were preparing for that. We were talking about it. What's the impact of it going to be?
Where's it going to land?
Where's it going to land?
Yeah.
That's exactly right. Other conversations, kind of political conversations about debanking and other issues. We have to anticipate those issues. We have to talk about those issues as an industry. We have to explain where we think the greatest debanking is happening, which in our strong view, based on the data, is because regulation continues to push products and services further and further away from consumers. So anticipating those opportunities, but also understanding the risks that come along with them, was something that we were very apt to do.
So also your event, what was the enthusiasm about? What were people talking about on the positives? I guess there's no event that's all doom and gloom. In fact, usually they are an upbeat thing. What was the upbeat message this year?
I think that banks have found their voice. I think that we are back in this place where we understand that to win in this market, to win in this environment, you got to cut through the noise. You got to focus on where you have the right to win. That was a conversation we actually had the CEO of Plaid, the CEO of the Consumer Bank for Bank of America, Holly O'Neill, and then our chair, who is the head of the Consumer Bank for Citizens, Brennan Coughlin, on the stage talking about where...
What a great group.
It was awesome.
I know all three.
It was
amazing. Really cool, yeah.
And each of them has a very different view about where they have the right to win. And that's a great conversation to have, and you should be asking that. And especially within this group, when you're talking about marketing and thinking about your consumer and where your bank is headed, where do you have the right to win? And how are you positioning your bank to get there? That is a conversation I think people were really excited to have, because that's an opportunity that I think everybody is sort of eyeing. Look, we've had the conversation about fintech versus bank, and now we're in this new part of that conversation. We've had these conversations about regulation and about over-regulation. Now we're in a new part of that conversation. We're coming out of COVID. There's just a little bit of a fresh start for this industry that I think people are trying to identify their opportunities and really seize on those opportunities in this moment.
The industry knows what the opportunity is. The industry knows that they have the opportunity to have a voice. However, we have seen in the past, and my entire career, which is a whole lot longer, there's some people that weren't born at the beginning of my career. The reality is the ability to talk about what's good and what the possibilities are and deploying against that and actually doing it are sometimes miles apart. How would you recommend organizations get unstuck and actually take advantage of the opportunities that are there and the ability to deploy against those opportunities as opposed to talking about those opportunities? As I said, AI and data is being used more and more to save money, and that's one way to revenue, but the other side is the part that really impacts the consumer, who you're looking out for. Yeah. How do we do that? How do we get unstuck? How do you, as an organization, push, if needed, to get unstuck? Because you're looking out for the banks, but you're also having to look out for the consumer.
No, it's exactly right. And I think if you are not deep in that conversation already, you're so far behind. Not to scare you, right? But you think about Bank of America uses millions of data points every single day to improve the consumer experience. And so they are moving in that direction of anticipating the consumer's needs, right? We do think about, and you have talked about this in terms of just making banks move into that risk. And I think that there is more openness to it, My job is to create a regulatory environment that allows for that in a safe and a prudent way. But when we talk about leveraging data, well, first of all, you've got to have the tech stack, you've got to have all the technology and the ability to actually leverage and use it. And so when you hear, it's not just small banks, right? When you hear even the biggest banks talk about that transformation and what it was like, and you watch banks like Capital One, who went through a transformation not that long ago, around 2020, where they're moving from 103 tons of metal, literally, moving through copper and metal to go to the cloud. That is an enormous transformation that took a lot of guts to get there.
Legendarily had more data than any of the big banks because they were in the credit card space where you had all those, every transaction.
And they know that that is the gold mine, right? They understand that that is how they're going to really tap into the consumer experience. That is going to drive their business for years to come. And so they had to take that chance. They had to take that risk. Jamie Dimon was just talking about it. If you read his shareholder letter and his leadership speech, he talked about, whether they were going to go to cloud. And he had some concerns initially about it. I think it's okay to have those concerns initially, but then recognize quickly, this is what's going to take us to the next place. So banks are doing that actively. If you can join conversations with your peers, again, CBA has the heads of the different AI groups within some of the largest banks that get together and they talk about, here's the best use cases, here's the risk we've seen, here's the regulatory concerns that we've got, and here's what we would like to see, the outcomes we'd like to see, so that we can be the voice and then go drive those regulatory outcomes to set that environment for them to do what they need to do. But, again, if you're not moving, I think that is probably the biggest concern, really understanding where are you right now. Do you have the data? Is it clean? Is it usable? And then do you have the ability to actually leverage it?
And remembering that we have partners that we didn't have 5 years ago.
Yes.
150 of them on our showroom floor right now. That will help you make, we talked about this earlier, help make your data usable.
Yes.
You don't have to do yourself. If you're using data as your excuse for not moving forward, you're missing the boat because there's 150 people out there that will help you at least solve for the problem you want to take care of within the data realm. You, as you mentioned, you serve financial institutions that I would imagine in this room, the majority are not at the 10 billion plus. How does what you do have a trickle-down effect on a beneficiary level to the smaller financial institutions? How do they benefit from what you're standing up for the larger banks for?
I do. Again, this is another conversation point that has shifted. So it's no longer big versus small, at least not from a CBA perspective. And I think
not from an innovation perspective.
Not from an innovation perspective, right? I mean, so let's take Reg II, right, where it was applied to 10 billion and above. If you were a smaller issuer in that marketplace, and pretty much everybody is, because everybody was using debit interchange, smaller issuers also saw their debit interchange revenue decline by almost a third. I mean, it is remarkable how that trickle-down effect, that pressure, that competitive pressure to offer the same services, to be as competitive, impacts smaller institutions as well. We think about things like third-party risk management, right? And we do, this is an area where I think that there is an ability for us to actually change the outcome, for us to actually drive some positive change. Right now, third-party risk management is very unwieldy. So whether we're talking about AI providers or any of the fintech providers that are out in your hallway that have services that are available to this group, the group in this room, that make smaller institutions in particular more competitive, more digital, more able to meet their consumers' needs. We need to figure out how to make TPRM less unwieldy, right? It is very complicated. Can we do TPRM as a service? I don't know, but I think it's something we should look at. In Europe, I think regulators have taken a little bit more of a hands-on approach. In some ways that's good, in some ways that's bad. But in the US, it's up entirely to the bank to essentially be a regulator of their vendor. Well, if you're working with AWS, that's gonna be tough to get your arms around that. So is there an ability for the regulator to come in and say, look, let's share insights across Bank of Jim and Bank of Lindsay can share insights, you're using the same vendor.
Right.
How can we do that in a safe way? So there's just a lot of things that I think we could do from a very practical standpoint that would make it more efficient and effective for small lenders in particular to benefit from some of these regulatory changes.
So you look at AI and you look at data and insight. You just mentioned the ability to transfer information back and forth. How do you see that landing? Because it's going to have to land pretty quickly. How do you see that landing with regard to not just open banking regulations, but the whole world, maybe a agentic AI type format? How do you see it landing when you have small, Satish in the previous interview said, I'm worried about the 25-person shop that can make banking as easy and as good as Ally in about 6 months. And I have to always worry about that creation being out there. So I got to stay ahead of that. How do you see this landing with regard to the ability to share data, the ability to make it so our data becomes more powerful? We already see Amazon doing it. We see the pizza shop in the corner use it when we call up and they say, do you want the same thing you ordered last time? Consumers want it. They want to be safe, but they want the benefits of data. How do you see this landing in the near term?
Well, you hit the nail on the head in terms of the consumers are demanding it. So it's not an option anymore, right? And they've had that ubiquitous experience in their phone since 2008. And you had 2 million apps that have been proliferated on a phone, on an iPhone. And then you've got the secondary
Talking to each
apps.
other in some cases, yeah.
Talking to each other, and secondary apps that, if you think back to Uber's initial days, they were leveraging the data and the technology of Google Maps and of payment systems setting underneath it, right? It was an open architecture. Can you imagine if we had that in banking? Right? There's all kinds of issues. Now, so while it sounds really, really good on the one hand, let's just think about the instances where it could go really bad, right? So the instances where it could go really bad, Pokemon Go. Anybody who was familiar with Pokemon Go, I had a colleague walk me through this because Lil Brainerd actually talked about this in one of her speeches several years ago, that when Pokemon Go was released, the parent company that stood behind it actually used an outdated version of Google's API, and it exposed consumers' information, their email, and a lot of information that the consumer really hadn't permissioned. It was a big, big deal. That didn't stop 500 million consumers from downloading it. So think about that on the scale within our industry, right? We can't have those issues. We can't have those mistakes. Banks are held to such a higher standard from a data privacy perspective, from FCRA perspective, if we're talking about AI and credit decisioning. From every perspective, we're going to be held to a higher standard. That can't happen in our space. So when
but it can't hold us back either. I mean, it's a dynamic it's a seesaw because on one hand, we have the standards we have to live to.
Yes.
On the other hand, the consumer is saying, half of them say, I need all those standards. The other half are going, come on, don't make it so damn difficult.
Right. All those disclosures you got to work through and everything else. But look, I think on the open banking question, the industry is moving to open banking. We've been moving to open banking in this new kind of ecosystem for quite some time. The average consumer has around 5 fintech apps on their phone. That's incredible. Thinking about just 5 or 6 years ago, that simply was not the case. So we're moving in that direction, and banks are moving to a more open, architecture. Anyway, what's troublesome though is that the CFPB and their rule, and it's been challenged in court. We were not part of that challenge, but it has been challenged in court.
You watched it closely.
We watched it real close. Let me tell you, they are moving to force it into a European style of open banking. And if you're going to go in that direction, which we have questions about, do they even have the authority? I would argue strongly they don't. But if they do, and again, you can be pro-open banking and still not like this rule. If they did have that authority, they should have at least fixed the problems in the market. That's what a regulator does. So stop screen scraping. Hold other players to a higher data privacy standard. And at a minimum, if you're not going to do that, make sure that the liability doesn't come back on the banks. Because right now, you all will be open to tons, pretty much endless, fintech and others who want your consumers' data that you have to permission, you have to give it. And yet, if there was something that went wrong with that consumer's data, you're going to be on the hook for it. We just don't think that's right. So I don't know what's going to happen with this rule. A lot of questions. I do think that we're moving into this system of more open banking. I think that that's happening on its own. I guess my request would be for the administration as they think about this to maybe take the approach that they're taking on 1071, the 1071 rulemaking, which is small business data lending, I'm sure you all know. And they're going to say, look, we're not going to throw the entire thing out. It was required by Congress, but we're going to fix it. We're going to scale back the number of data fields in 1071. For 1033, they could address some of these problems, or they could scrap it and they could just stick to the letter of the law, which says, the letter of the law in Dodd-Frank says the consumer has the right to their own financial data. It says nothing about APIs and permissioning and all these other things. The consumer has the right to their financial data, and every bank should believe that that is the right thing. I believe that we do believe that that's the right thing. So, again, I think we're moving in this direction. I hope that there's some regulatory parameters that make sense and that address the problems in the marketplace and don't exacerbate the problems that are already there.
So we have different levels of spokespeople out there. We have the CBA, we have the CFPB, we have the Fed. We have all these organizations that would say they're out for the consumer. They want the banking industry to be fruitful and beneficial. How do others really make it so that these organizations try to come together before everything goes public? It seems like, and mind you had an administration change, there's all kinds of other dynamics, but how do we make it so that the consumer doesn't get confused by the noise where it seems like everybody's at each other's throats at times when they're all truthfully working towards the same end goal in context? How do we do that? What's your? I know that, and I give you the option to back out of that. I didn't mean to hit you with that, but on the other hand, I'm just talking from a consumer. I'm not talking from a banking industry person because I don't have a vested interest except this event. How do we try to deal with that?
Well, I can tell you from our bank's perspective, we are not only working to get the rules, the most onerous rules that we believe hurt consumers. So we believe in our heart of hearts, because the data shows it, consumers were going to lose out on the overdraft rule. Yeah. They simply were. We believe, and we know that consumers were going to lose out on the credit card late fee rule. So we worked, and we actually just had the overdraft rule undone. We believe that the credit card rule would be undone in litigation. We're going to work every single one of those rules. So that's the immediate thing that we're focused on. But
it wasn't going to help the consumer anyway.
No, it was going to hurt them.
Right, exactly.
For sure.
Yeah.
Banks will have to pull those services back. So we do believe that there is an opportunity, though, beyond those immediate changes to get permanent change. So to your point, how do we get people in the room? How do we take politics out of regulation where it never should have been? And I think that we actually have an opportunity to do that. Yeah. So some of it's going to be noisy
sometimes disruption
and
works
ugly, but understanding that banks, again, from a CFPB perspective, I don't believe the CFPB is going to go anywhere. They were created by Congress. Unless Congress decides to undo them, which will not happen, banks are going to be regulated by the CFPB. So from our perspective, the CFPB is the only one that at least has supervision of non-banks. So let's fix the CFPB. Let's right-size the CFPB. Let's get them focused in the right way.
Everybody's on the same page.
Let's get regulators in the room. Yeah. We're not ever going to agree on everything. We understand that. But if we all have the interest of the consumer, if we all actually do cost-benefit analysis for the consumer, then I think most of these issues will get resolved well before it ever gets into the public.
Great answer, because you've seen me before, we've talked before. I believe that you got to bring compliance within a bank. You got to bring compliance and legal into the equation earlier rather than later, because it's just going to create confusion and disruption if you wait too long. That was exactly the way you answered it, saying that let's get these voices together before we go public with anything. We have the same overall agenda. We may just have different paths to take. Lindsay, it is always a treat talking to you. I can't believe we had two in one day, but that was kind of cool. We did different angles on the same theme. I appreciate everything you're doing with the CBA. I think everybody, if they don't already pay attention to what the CBA is doing, it is not just for the big banks, even though that's who you represent. It is for the consumers, for the banking industry, and there's great intent, and I appreciate what you're doing.
Thank you.
Thank you.
Thank you.
Thank you.